Hello, and welcome to another update on ADA. Yeah, the ADA chart continues to grind lower. Yesterday, we already saw live in our live session, our member live session, how the price started to sell off. And I immediately said this looks like an internal third wave. But that was not only ADA. I mean, I think when we had our member live session, right, it was while this sell-off happened. And this looks like it looks like it could be like the main element of a third wave decline in a larger third wave. So you can see the microstructure there in this wave 2 correction. So the idea is, okay, 10th of October flash crash. We all remember, we talk about it every day here. Can't avoid it until we finally leave this range behind us. I think it might take a while. And then obviously we had a rally. Yeah, we had this rally and then an A wave down, a B wave bounce. And now we could indeed be in this C wave decline. I already showed you a few days ago what the ideal target area would be for this C wave. It's between 55.6 cents and 48.6 cents. Again, low probability of working out, just because the data quality is completely, it's distorted, it's negative, it's bad, it's pretty poor. Poor data quality since that 10th of October flash crash, because you have different low points on different exchanges on the 10th of October, making all of this a bit messy and kind of unclear. However, it's possible this is a 5-wave move up, and then an A, B, C to the downside is what I'm tracking. I already gave you the target area, and for now, looking at microstructures, it's entirely possible that the market is following this impulsive decline, even though with this bounce here from the support area, again, same support area where we bounced already on the 17th of October. Any higher from here means the microstructure is shifting, possibly then to a diagonal pattern, but it would not change the view that the B wave could have topped. With a double bottom structure that we see here, we are left without any clear evidence of a meaningful low. I mean, a bullish alternative would be a reset of the B wave. That can always happen. It would leave us in this range for a little longer, but I haven't got any, let's say, high probability setup here. That would require a 1-2 setup to the upside, which would look like this. I would need to see 5 waves up, 1, 2, 3, 4, 5, above an initial signal level. The nearest one I can give you is 66 cents. That's the nearest structural resistance, really. That's still, we at that point we wouldn't even have broken above the 27th of October high. So it's a very, very early signal level. But if we get 5 waves up and 3 waves down, we can start to look for higher prices. Ultimately, what really needs to happen is a break above this swing high there from the 10th of October at around 82.6 cents. This is a key level that I've been talking about for last 2 to 3 weeks. Nothing bullish below it, because everything is questionable down here, because we don't know if this low will stick from the 10th of October. We will get further signals that this is going to happen if we get a break above this green line. I'm not talking about the first one, I'm talking about the main one where that selling pressure started to kick in on the 10th of October. So short-term downside pressure elevated, especially as long as we stay below the 66 cent level. Market should be moving towards 55 cents or lower. Above 66 cents, we might need to adjust, but that doesn't mean it's necessarily bullish. It might be short-term bullish, but it might just be an extension of the range, right? So it might look bullish short term, but the structure at the moment does not give us any clear, let's say, bullish breakout structures. I keep watching it, of course, I always wear my bullish glasses as well, but I have to stay objective here, guys. And so for now, momentum remains very, very muted, and we remain caught in a range, possibly with a move towards 55 cents. Going to happen. Doesn't have to be in a direct sell-off. I see the tendency for this to morph, to change a little bit its structure. And if that happens, then I will give you an adjusted structure. That is not, however, really meaningful, because we don't have any real high quality setups anyway. Well, we have a 1-2 setup there on the chart, but the microstructure of a correction can easily shift. So as long as the bulls show up before the price breaks below 47 cents, the 1-2 setup is plausible. The microstructure, though, suggests that this correction is not complete yet. That's the update on ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then check out our X channel as well for additional charts, updates, news, and much more. I'll leave a link in the comment section. Thanks so much. Bye-bye.